Look, quick question. If someone gave you $10,000 right now, where would you put it in 2026? Because this year is weird. Interest rates are changing. AI is transforming entire industries. Real estate feels unstable. And a lot of people honestly have no idea what's safe anymore. But here's the thing. The biggest investing mistake isn't picking the wrong asset. It's doing nothing while your cash quietly loses value every single year. Inflation doesn't care that you're waiting for the perfect moment. Your money is either growing or shrinking. And today, we're breaking down some of the best places to invest money in 2026, depending on your goals, your risk tolerance, and how aggressive you want to be. My name is Henry, and I spend way too much time thinking about how people build wealth without gambling their future away. If you want smarter money strategies explained in plain English, hit subscribe, because that's exactly what we talk about here. Let's start with the safest option first. Number 5. High-yield savings accounts. Yeah, I know, not exciting. Nobody brags about getting rich from a savings account. But here's why this matters in 2026. A lot of online banks are still paying surprisingly high interest rates compared to traditional banks, which means your emergency fund can actually generate real returns while staying liquid. And in uncertain markets, liquidity matters. This is not where you build massive wealth. This is where you protect yourself from making desperate decisions later. Number 4. Real estate. Now before you click away, no, you do not need millions of dollars to invest in real estate anymore. Because in 2026, there are more ways than ever to get exposure to property markets. REITs, fractional investing platforms, rental properties, even short-term vacation rentals in the right markets. Here's what most people don't realize, though. Real estate is no longer easy money. The people making money now are the ones buying smart, not just buying anything. Location matters more, cash flow matters more, and bad deals are getting exposed fast. Number 3. AI and Tech ETFs. This is where things start getting interesting, because whether people like it or not, AI is reshaping the economy right now. Entire industries are becoming more automated. Some companies will explode in value over the next decade. Others will disappear completely. And here's the important part. Most people are terrible at picking individual winners. That's why ETFs are powerful. Instead of betting everything on one company, you own an entire basket of them. So if AI continues growing in 2026 and beyond, you benefit without needing to predict the exact winner. Number 2. S&P 500 index funds. Honestly, this is still one of the greatest wealth-building tools ever created, and people ignore it because it sounds boring. But boring gets rich surprisingly often. Historically, the S&P 500 has averaged around 10% annual returns over the long term. That means simple consistency can outperform most emotional investors. No panic trading, no trying to time the market, just steady investing over time. And this is where compounding becomes insane. A person investing consistently for 20 years usually destroys the person constantly chasing the next big thing. But now we get to number 1. And this might surprise you. The best investment in 2026 is still yourself. Seriously. Because AI is replacing average skills faster than ever before, which means high-income skills are becoming more valuable, not less. Learning sales, learning content creation, learning business, learning how to use AI tools efficiently. These skills can increase your income for decades. And unlike the stock market, nobody can crash your knowledge overnight. Here's what most people miss. Your income is your biggest investment tool. The more you earn, the more you can invest, which means increasing your earning power changes everything else financially. So here's the real takeaway. In 2026, smart investing is not about chasing hype. It's about building a balanced system. Safety from cash reserves, growth from index funds and tech exposure, stability from real estate, and massive upside from improving your own skills. Because the people who win financially are usually not the smartest people in the room. They're the most consistent. They avoid obvious mistakes. They stay invested longer. And they think long-term while everyone else is distracted short-term. So let me ask you this. If 2026 became the year you finally took investing seriously, where could your life be 5 years from now? Because future wealth is usually built from decisions that feel small today. If this video helped you think differently about investing, hit like and subscribe. I break this stuff down every week in a way that actually makes sense. And yeah, you don't need to predict the future perfectly. You just need to put your money somewhere smarter than where it's sitting now.